Hi, I'm Paul Hazelhurst from Bstar. In this session I want to talk to you about our Business Value Gap Calculator. The Business Value Gap Calculator, or BVG, has been designed for an advisor to help a business owner understand if they're going to have a value gap when it comes time to retire. We all know that business owners either have no idea or overestimate the value of their business, and many are relying on the sale of their business to fund their retirement. Unfortunately, from what we're finding, most business owners' values of their business is way below what they estimate it to be. So they really need to understand as early as possible what is their business worth, what value gap do they have, so that as advisors we can work with them to help them understand the options they've got to close the value gap.
Okay, so what we're now going to do is we're going to have a look at the business value gap, and we're using the same case study, and this time we're focusing on one of the owners. So having valued the business, what we're now going to do is we're now going to work with the individual owners to help them understand what they look like personally from a financial perspective, but also have a discussion with them around their exit, their timelines, and how much reliance they're placing on their business to fund their retirement. So we're going to talk about Brian and Tammy. Brian's one of the 25% shareholders in Mining Engineers, and we've asked Brian and Tammy to have a little think about their financial position going forward, and to bring in some other information with them. Now, this is a session we're actually doing live, so this is the only tool that Bstar's developed where I would recommend you actually do this live with a client. And in this case here, we've actually got our computer plugged into a plasma screen, so Brian and Tammy are able to see everything that we're doing here. So as you can see, Brian and Tammy, husband and wife. Brian's 54, Tammy's 53. As I said, we've valued the business, so we've got all that information. What we didn't know what their personal timeline was. So as Brian said at the beginning of this session, in 5 years' time we would like to be in a position where our business is sustainable and well positioned for the future, and we would like to be able to walk away from that in a strong financial position to enjoy the rest of our life. So that's what this session is all about. It's about understanding what are they going to look like based around their current financial position. Now, the other thing that we've asked them to consider is what sort of dollars would they like to earn from their investment assets in retirement. So they've come back, and their best guess, they don't have a financial plan, so they've never gone through a financial planning process before. They've come back and said, look, we think we'll need about $110,000 in gross income. They're pretty conservative, so the investment yield they expect to get from that we've put in at 5%. We also want to understand what their investment assets are going to look like. So this isn't their home, this is their superannuation, their shares, their investment property. They've got a bit of cash in the bank, and they've also got some loans that they're going to need to clear when they retire. And those loans are funding some original investment in their business together with the investment property that they purchased. So we have that basic information. Now, because we valued the business, we actually know what the EBIT is. So Brian being a 25% shareholder, we're therefore allocating 25% of the profit. And we're looking at that over the last 3 years. We're also putting in the cap rate that the business cap rate calculator calculated. And what we want to do is we want to have a look at, if nothing changes, if the business continues to perform the way it has over the last 3 years, it continues to perform the same way in the future, what are Brian and Tammy going to look like? So that's all the information that we need to work through this. We know that Brian and Tammy need to have somewhere around $2.2 million of investable assets to fund their cash flow, which will fund their retirement. And what the calculator does is actually work out whether they're going to have those assets to do that. So here's the one-page statement that's created. As you can see, the gross business value, their share of it, needs to be just over $1 million. Their current share is $646,000, so they have a value gap. They're at 63% of where they need to be. The statement actually indicates how much their EBIT needs to be at the time of sale. But as you can see, it's going to take them, if nothing changes, it's going to take them 17 years to actually get to the position where their business will be worth what they need it to be worth to fund their retirement. So it's 12 years beyond their expectations. And you can pretty easily see what the issue is. The historical profit growth in this business has been very poor at 2.72%. Okay, so in most cases, and certainly in the case of Brian and Tammy, their business is their greatest wealth creator. So what we're going to do is we're going to go back and we're going to do some what-if analysis. So we're going to print off and save that statement. And for the first what-if analysis we're going to do is we're not going to play with the number of dollars they want to spend in retirement. We're not going to look at their personal financial position. What we're going to do is we're going to disable the historical growth rate, and we're going to input what we believe and what the owners believe is a more realistic growth rate on their profit that they want to achieve. Now, having completed evaluation, we know that the business owners are pretty confident that they can improve their profitability. So, and in fact, their budgets for the next few years are annualised improvement in profit of greater than 12%. But let's be conservative in this case here, and what we'll do is we'll just select an 8% growth rate. So what this is going to do is we're now disabling the historical growth rate, and what we're doing is we're now putting a projected growth rate of 8%, and that'll be applied to the most recent year's EBIT, and then that will calculate what their position will be in 5 years if they are able to achieve that. So let's see what the result was. So what they need their business to be worth hasn't changed. What assets they need hasn't changed. Their value gap hasn't changed. But what we've now got a projected growth rate of 8% instead of 2.72. And what that's done is that's actually improved their position from 17 years as it was before to a 6-year position. So they're almost there. As a result of them being able to improve their profit in the business by 8% year on year over the next 5 years, they've almost got to the point where they will have a business of value that will assist in supporting and funding their retirement. Now we may decide to run a number of other scenarios. You might look at changing the amount of dollars they want to spend in retirement. You could change the timeline. There are a number of other things you could do, and you have the ability to do that using this tool. So a very powerful process. It's very visual. It gives your clients the opportunity to understand the link between their personal financial position and their business. But what it really does is it gets people to take action, because they understand that unless they change things, they've got little chance of achieving the financial position they need to fund the next stage of their life.